Okay, good morning. You're all welcome to today's episode of the Market Snapshot. My name is Norbert Kiiza, and of course, I'm going to be taking you through the snapshot for today. Today is the 7th of February, 2024. And of course, we've been having quite a lot that has been, happening in the markets. Okay, so I think by far and large, we have a lot of risk-off sentiment. And of course, we are seeing that the risk-on sentiment that actually was there from the previous weeks has dimmed quite substantially. And this has a lot to do with last week's Federal Reserve Conference. I think as you're aware, the Federal Reserve had its conference held by Jerome Powell. That was last week on Wednesday. And of course, that rate cut narrative has been pushed back substantially. We are seeing the DXY and of course the US dollar is now back reigning king on the markets. EURUSD has been performing fairly weakly. GBPUSD, of course, is barely recovering from the sell-off we had from Monday, and of course the huge sell-off we had from last week. Now, as if Powell's hawkish pause was not enough, we had a blowout report on NFP on Friday. I think if you guys check the NFP report that we got last week on Friday, you noticed that there was actually quite a bit of, the market actually had a lot of selling because of the very strong report. So we had NFP numbers coming out at about it was about 300, I think, and 35K jobs, much higher than the estimate number of forecasted number of 175,000. So we saw a very strong sell for gold. We saw a very strong sell for the euro, as you see on the charts. We also had a very strong sell for GBPUSD and of course also AUDUSD. So now crossing over to the calendar, which we have on for today, just before I get to the calendar, I just want to show you guys that again we are having a much bigger push by the Fed members, indicating that they are not going to cut rates as expected in March. And of course, I am expecting that the rate cuts most likely will have to come in sometime around May or June this year. So we should see, I think, that the DXY performing fairly strongly. And we should then, of course, see some weakness coming in there for the risk-on assets like GBPUSD, EURUSD, and of course, even AUDUSD. Now, for those of you that are trading EURUSD, you must have also seen that the sell-off, especially last week on Friday, was very steep, as we'll see on the charts. And of course, that has to do with what the ECB has guided on. So the ECB mentioned in their most recent conference that they are most likely going to start cutting rates in April. So I'm thinking the huge sell-off we saw there had a lot to do, I think, with those comments that came in from the ECB. Now, looking on, we still have a lot coming in from the Fed speakers. Yesterday, we had Fed's Kashkari speaking, and of course, some of the main highlights from what he spoke about was still that rate cut narrative push. And of course, he's pushing back on it, of course, adding on to Powell's comments. Yeah, but of course, something that, of course, is staying quite visible in a lot of the commentary and the speak we're getting from the Fed is that they are still seeing that there's a possibility that inflation may rear its head again, and they are going to push back on it. So today, the major news event we have for today, I believe, is the 10-year auction, which of course is going to be released at that is at 9 p.m. today. So you're seeing it there. I've shaded it. This 10-year note auction, of course, we are seeing that there's a previous of 4.024, and we're expecting that should we get a higher figure coming out higher than this one here, then I'm thinking we should see a much stronger dollar. Now, if there's anything that is going to weaken the strength of the DXY, it's going to be this 10-year note auction. Okay, yeah. So I think aside from that, we've also had some industrial production data which came out earlier today, and of course we are seeing that German industrial production has actually been negative for some time, and of course the German economy was actually in a technical recession towards the end of last year, and I believe that's some of the reasons why the euro is going under a lot of intense selling. So moving away from there, we had an announcement that was yesterday. And of course, there's this bank here, which is called the New York Community Bank Corp. Okay, this bank is the one that actually took over the Signature Bank. So if you guys remember last year around the time of March 2023, there were a number of US banks that went under, and of course they had to be taken over by other banks for them to stay operating. Okay, so now you can see this bank, which is called the New York Community Bank Corp, is actually right now down 60% since it actually took over Signature Bank. And of course, this is not the only bank. We are still seeing that maybe there's a possibility of some of, this kind of condition where some banks are still suffering from last year. And again, it might not be a contagion risk whereby a lot of the big banks are affected, but I believe some of them are affected by that. Yeah, so I think aside from that, of course, I've already spoken about the Federal Reserve and most of the guidance that they have given. And of course, Powell also actually had an interview. He had an interview, I think, on a show called 60 Minutes. So you can always search it up and check it and see what's happening there. So without wasting time, let's cross over to the charts and see what's taking place over on the charts. So looking at the charts, I think I'm essentially going to first focus on AUDUSD. So AUDUSD has been in a very strong downtrend. That was from December. And of course, you can see that even from the NFP number that we had on Friday, we saw a very nice pushback there. But it seems to be now holding on to this level here, which is where it's currently at. And of course, right now we're also seeing some kind of a descending wedge forming there, as you can see. And I'm expecting that we should potentially see some recovery there for this particular currency pair to the upside. And should we get that recovery, then I'm thinking we could potentially see some opportunity to buy it in the medium term, and of course see how we can see how to take it to the upside. So of course you can see that now from this level here, which is of course a key level that I marked around 0.64, it bounced off that level quite nicely, and it's now moving to the upside. So I'm thinking, should we continue to see some recovery there, it could be a nice opportunity for us to look to long AUDUSD, at least back to this level here. Now, another key level for us to mark and of course to watch of support is around this level here, where in case price gets back to this level and of course breaks above our descending wedge there, we could potentially see an opportunity for us to hold our trades there back to the upside. But there is still potential for very limited upside movement on this particular currency on the back of DXY weak strength. And of course, even today, should we see a very strong 10-year auction, then we could potentially see this weakening further and possibly coming back to this level on the lower side of the wedge. But for now, there's some relative weakness there. So going over to the Dow Jones right now is still stuck on an upside move. As you can see, if I change this to a line chart, you can clearly see there that we're actually trending towards the upside area there of our 0.0 Fibonacci retracement level. And I'm thinking that for us to see any downside move, we need to see structure change to the downside for the Dow. The structure has not changed yet to the downside. And until we see structure changing, I'm thinking Dow still has potential to move higher. So I'm expecting that we should potentially see the Dow starting to create some kind of weakness. So we also see some kind of a head and shoulder pattern in the forming here. So if you look here on the Dow Jones closely, you can see that we have our head there and we have our first shoulder here, which is the first one. And I'm thinking we could potentially have a second one forming here, which could give us an opportunity for us to see a sell back to this level of the 38.2. But for now, Dow is looking fairly strong, and I'm thinking it could hold on to that level and we should see it selling potentially towards the end of the month. Now, something that is important for traders to understand is that these indices, whenever you're trading indices, you focus on seasonality. So when you talk about seasonality, we are saying that usually around the time of March to April, we normally have a lot of selling momentum that comes in for the indices. And the reason for this is simply because most times the institutionals are cutting back on their stocks so that they can be able to get a discount later in the year. So that discount usually comes around the time of April, and I'm thinking that's when we should have a perfect opportunity for us to get into a trade. So today we should see an opportunity for us to swing sell the Dow and possibly take it back to this level here. And of course, if we manage to hold this level, then I'm thinking then we should see another move for it higher. But for now, we should see some opportunity for us to swing short the Dow, possibly back down here. Looking at the H1 time frame, this is how things look like on the H1 time frame. You can see that yesterday we had a very nice sell that came in for the Dow, but immediately we had that sell, it actually held this level quite nicely and had a pushback higher. So we should see how it performs there. Should we get another shoulder forming like it formed here, which is from around here, it would be a very nice opportunity for us to get into a sell and take it back to this level here. Last week, I think on Wednesday, I believe I provided you guys a very good opportunity for you to make some money from the Dow because I showed you a very nice sales setup for the FOMC. If you recall from the market snapshot I did on Wednesday last week, I clearly indicated to you that we were going to have a hawkish pause. So a hawkish pause meant that we would be looking for sales on Wednesday. So you can see on Wednesday last week, we had a very nice opportunity to sell. And of course, it was a very good trade because it gave us really some nice, some nice points there. So you can see this was a trade we got into from the FOMC, and it was a really profitable trade because when Paul came in and spoke, we had a very nice sell there, and of course it got closed out somewhere around there, and we got out of those trades there. So for now, I'm thinking we are going to range a bit, but we should see potentially some pushback coming there to the downside. So now switching over to NASDAQ. Now NASDAQ is, I believe, is stuck in a fairly interesting area here. So you can see just by looking at it that it's stuck in some kind of an M pattern. If you go on the H1 time frame, you'll be able to see this nicely because on the H1 time frame, we're having an M pattern in this area here. Okay, so the M pattern, it forms a bit like this. We have something like this. Okay, so this M pattern is where we had our double tops, and of course the double tops were formed around here. So should we see the price action potentially going back higher, we could potentially see a triple top forming, which would give us another opportunity for us to get into a sell for the NASDAQ to the downside. Now, the reason why the NASDAQ especially is not really selling that much is because of some of its heavyweights like NVIDIA, which are supporting potential upside momentum there. And I believe that's one of the reasons why we are seeing some fairly weak movement on this particular asset. But for now, we can expect at least a minimum of 2 to 2.5% pullback on this particular index, which would give us a target level of somewhere around 16,800 or 16,900 from current levels. So we have to see how this M pattern works out. If we fail to break the M pattern to the upside, then I'm thinking we should see a nice pushback down for the NASDAQ and potentially see it selling down. But for now, we are going to see it potentially holding these levels up here. Now, when you go on the higher time frame also, especially in the H4, you're going to notice that there's something quite peculiar happening on the NASDAQ. You can see that the previous FVG, which you had from last year, was actually filled the time when the NASDAQ sold back to this level here. And I'm thinking now NASDAQ is going to delay to sell, but once it does, we are going to be able to get into some nice trades to break this level to the downside. Now, I also want to quickly look at gold. Now, when you check on gold on the H4 time frame, you notice that gold is actually stuck in some kind of consolidation there. Now, again, when you also see how gold is performing on the H4 time frame, you can clearly see there that we are stuck in some kind of a range. But for gold traders, and of course, even with the guidance I've been providing to you guys, very good areas to sell gold. Last week, if you were able to get gold at around 2060, was a very nice area for you to actually have a sell for gold. Now, what I can advise for day trading is that you might want to have your sell limit set for gold, especially at these levels here. Now, I'm still fairly bearish on gold, and I'm expecting it to potentially sell. But for now, we should see it ranging around here. On Monday, it bounced very nicely off these lows here of 2015, but I'm thinking there's liquidity that it needs to pick around the area of around this area here, which we had of 2002, and also this area which we also held of 2015. Now, that area where gold is trading from is a very, very nice area for someone to get into a sell for gold, and we should see it potentially breaking below this level here where we have descending triangle. So today we should see some weakness there and potentially see gold coming to retest that level of 2018 later in the day. So crossing over to EURUSD, EURUSD again has been a sell. I think for most traders, definitely you should have been looking for sells on EURUSD. The reason for the weakness again on this particular pair has a lot to do with the expected rate cuts that are going to start as soon as April. So that's why we are seeing that there's heavy and intense selling for this pair. And even now, I'm still expecting some weakness potentially to these levels that we saw around October, September. So for now, you might want to monitor and see essentially how EURUSD is doing. Again, we had the descending wedge that we drew sometime last week, but it failed to break above the descending wedge, clearly because the market has essentially been pricing in a weaker EURUSD with expectation of rate cuts. So right now, and of course, the level that I've marked here is a level that EURUSD has holding quite nicely. And should we see, we have had, again, two bounces off this level. As you can see here, we bounced it off around here. And of course, we bounced it off around here. So we need to keep monitoring and see what happens there. Should we get a nice bounce off this level to the upside, then it's going to give us an opportunity for us to see how we can potentially long EURUSD to that level right there. But for now, just keep monitoring to see what happens. Now, crossing over to GBPUSD. GBPUSD has been a tricky one. And of course, we marked our asymmetrical triangle here from the NFP, but you can see how very nicely we tore down this nice entry point from here all the way to this level here, a move of roughly almost, I would say, 250 pips. And you can see quite nicely there, we had about 250 pips to that move there. So GBPUSD bounced off this level again quite nicely. And of course, it's just trying to picked up that liquidity and now is on a move to the upside. So we should see it at least recover, I would say, about 50% of this retracement that it made from the Fed, from the FOM, from the NFP. So NFP, we had a move here. And of course, after NFP, we saw it selling quite nice to the downside there. So it's going to recover at least 50% of this move. So right now, it has recovered roughly about 100 pips, and it still has about another 100 pips to do to the upside. So we need to monitor it to see what happens there. So again, you can see we bounced off this level that we tested in 8th December, and we have also closed our FVG, which we had that was created from 13th of December. So if you check on your 13th of December, you'll notice that this level here, around here, that this was from the previous FOMC conference. We came and closed out those orders that were still stuck there, and we're now moving back up to the upside. So now talking about the DE40, which is, of course, is the DAX. DAX has been relatively strong, and of course, this is on the back of very strong earnings by the companies in Germany, but also because of the expected rate cuts in Europe. So keep in mind that this particular index still has a lot of upside momentum. If they start cutting rates in Eurozone and of course also in Germany, what's going to happen is that there's going to be strong upside potential for this particular asset. But also, if you check on the client sentiment, you'll notice that retail shorts max bearish on this asset, which indicates that there is still potential for it to squeeze to the upside and even test levels up of 17,200, 17,300. So for now, I would stay fairly bullish and be looking to buy at every single time we get a nice pullback there of this particular asset. So that is essentially it for now for the snapshot, and I will be checking in case there are any questions that need my attention in the chat. Hello, Redemptor, how are you doing? Jambo, Jambo, how are you doing? I hope you're doing awesome. Morning, Robert, how are you doing? Morning, Joseph, Gicharu, how are you doing? Morning, J Squad, how have you been doing? It's been an awesome time. I hope you are able to benefit from the FOMC conference, J Squad. I hope you're able to benefit there, and yeah, you know you are able to get some opportunities there. Joseph, you're saying, can you check on DXY weekly chart? Okay, so let's check on a DXY, and I think for DXY we can check on trading view. So just give me a moment for me to check that out for you. Let's see, DXY. This is a dollar index. Okay. Let's see. Okay, so let me just share this. Just a moment. Let's see. Okay, so we are going to check the DXY on the weekly quickly. Okay, so this is the weekly for the DXY. DXY right now, again, as you can see, is trying to create another lower high. Okay, first one we had the peak around here when the Federal Reserve, I think, we priced in the highest point for any movement there, and now again we look like we are now poised to move to the downside. Okay, so we had this first peak point around here, second peak point is around here, and of course I think the peak point which we are going to have for this year, which I'm thinking is going to be somewhere around August, is going to be somewhere around here. Now, when we get that peak point, we are going to start selling, okay? Keep in mind, guys, that the DXY does not usually perform very strongly in election years. So it's just benefiting because the pushback on the cuts, which of course was expected because essentially the markets were moving purely on speculation, okay? So speculation, but we should see the DXY progressing higher, and it should at least top up. It should top from somewhere here. So we had this top here, we have the second top here, and I'm expecting the final and last top for the DXY is going to form somewhere around here, which is going to be around 105, potentially maybe somewhere around 105.993. But for now, there should be some fairly weakness there for this particular asset. Okay, so GBPJPY, I think I handled that sometime last week, and I mentioned to you that it's stuck in a tight range, okay? It's been stuck in a tight range since the Bank of Japan conference, and even now we see that there's still some weakness there. And again, if you check on it, you'll be able to see that that weakness is quite substantial. Let me just go to the MT5 for you to see. So you can see on the MT5 here, essentially what we had was we held this level here, quite nicely. That was on GBPJPY. But again, you'll also notice that we've been drifting quite fairly to the downside there. But despite the drifting, we're still seeing that it's still holding its levels quite nicely. So we need to potentially see what happens here. If we get some nice push to the upside, we could see a nice potential for us to buy GBPJPY to that level there. Now, the reason why the markets still have not really sold that much on this particular asset has a lot to do with the expected chance that these guys are not going to cut their rates. If they don't cut their rates soon enough, then it will give us a very nice opportunity for us to actually buy GBPJPY to the upside. But for now, there's still that possibility that we could potentially see an upside move for this particular asset. Yeah, I hope that helps. Francis, could you talk about a pair gold? I think I handled gold already. BTC, I think that one I've hinted on it. BTC again is still stuck in a potential upside move, and of course the reason for that is we're expecting that there's going to be some risk on that's going to come from the expected halvening that's going to happen in April. So I think every single short we've been having on BTC was a very good opportunity for you to buy off. So you can see that level was a very good opportunity to buy. We are still trading in discount levels on this asset, and there should be some opportunities for you to buy to the upside, potentially upwards of $48,000, $50,000. So for now, I'm still fairly bullish on BTC USD, and you can still even be able to take that opportunity on your chart there and see how you can benefit from it. Okay, so I think that's it, guys. I wish you all an amazing trading day today. We've been able to cover quite a lot, and I hope to see you guys next week for the same episode of the Snapshot. Have an amazing day. Cheers, guys, and I wish you all the best. Cheers.